We are seeing a higher euro and pound versus US dollar. Both of them are signaling a lower US dollar. As is the dollar versus yen. I'll go through the technicals to start off the new trading week by taking a look at those three currency pairs. So let's get started. Last week, the euro versus US dollar found bases against the 200-hour moving average through here, and that forced the price to the upside, came back down, and then forced price further to the upside with a breakout to highest levels going back to, let's go back to right around here, which is in the February of 2022. As you can see, we fell short of this swing area up here between the 1.1482 level and the 1.15158 level, reaching a high price of 1.14732. Got within about 9 pips of the low of that swing area before we rotated back to the downside. Currently trading at 1.1397, just under the 1.14 level. And what does that do for us from a technical perspective? Well, looking at the hourly chart, the 38.2% retracement of that move to the upside did find early support buyers in trading on Friday right here. And fell short of that level. By the way, that level also happens to correspond with this corrective low. It was before the 38.2% retracement of this move was established. Nevertheless, it increases that level's importance going forward. So we have two support levels down here and here that if the price does not get below and stay below, the bias remains more to the upside. That's the kind of environment we're in now after the break to the upside, breaking to the highest level since February 2002. You have to keep the bulls in control until the sellers can prove that they can take the price even below the the easiest retracement level of 38.2% retracement. If they can't do that, they're not winning. So be aware of that. Buyers in control in the euro versus US dollar. Break above the high price that we saw on Friday, and we open the door for further upside momentum. Let's take a look at the dollar versus yen next, and this currency pair off of its 4-hour chart, stretching it out, goes back to this swing area right through here. That's where the low prices from last week came in. The swing area was defined ahead of the extreme right through here, but defined by different swing lows through here. Here we had the break to the downside, which initially failed, and then we had another break to the downside, which went further, but then the other breaks lower right through here found support against this level before moving sharply to the upside. So moving back to where this area right through here and finding support like the euro versus US dollar just ahead of the, in this case, the high of the swing area, gave the buyers some hope that the price can continue its move to the upside. If the price were to move below this level, that would indicate more bearishness and would start to look toward the low prices that we saw back here in the month of August, September of 2024. But unlike the euro versus US dollar, which was making new lows going back to 2022, the dollar versus yen is not. So there is a little bit of a hope from that perspective. Let's just take a look at the hourly chart. And if we look at the hourly chart, what might be in play here is if I put a Fibonacci retracement from our high price right here to the low price right here. Like the euro versus US dollar, you want to see the price extend above that 38.2% retracement. Before that, however, comes this 100-hour moving average at 144.92, just short of the 145 level. And I would say that would be probably, with it moving down sharply here, that would probably be the easiest hurdle to get to and through to increase the bullish bias. If it gets above that level, then we'll give the buyers a little bit more control, at least in the short term. There'll be work to do for the buyers to prove that they can keep the momentum, including getting above the 38.2% retracement, getting above the 200-hour moving average. All these three levels are kind of 1, 2, 3 in a row that would need to be broken to increase the bullish bias for the dollar versus yen. Until then, sellers probably are still in play, of course. They've been pushing the price down for a while here, so be aware of that. The sterling versus US dollar is moving higher and trading here today, and in the process is moving up, not toward last week's high. We're looking at the 4-hour chart, but the week before's high. Last week we couldn't extend toward that high right there. We felt pretty short of it, but today we're seeing increased momentum to the upside. That high comes in at 1.32067. And if we go back in time, I'm going to just stretch this out a little bit more through here to focus on this area right through here, up here. This is a swing area that was developed back here where we had different swing highs in place through here. We tried to break above it, couldn't do it, and then reestablish resistance there, and then it was increased the area's importance right through here. Had ups and downs, finally moved above it through here, stayed above it through here, tried to stay above it here, broke through it here, and that was it to the downside. So it wasn't until this a few weeks ago that we started to move closer to that swing area right here between 132.21 and 132.39. Ultimately, if the price is going to go higher, we need to get above this high right here. We also need to get above that swing area. If it gets above that swing area, then it opens the door for further upside momentum for the sterling versus US dollar. So there you have it, a quick look at 3 of the major currency pairs from a technical perspective. My name is Greg Michalowski. Good fortune with your trading today and this week. Bye-bye now.